we have to start with the economic news. We talked a lot about inflation, of course, and of what the Fed would do about it. And in fact, would they lower interest rates? But we got beat to the punch.
Yeah, we really did. The European Central Bank, they came out on Thursday and decided that they were going to lower their target rate. Bank of Canada, earlier in the week, I think that was on Tuesday, they lowered their policy rate as well. So in the past, the Fed has really been the one in the lead in terms of, hey, let's start hiking rates, let's start cutting. But now the script has been flipped a little bit, and we've been beat to the punch.
Right.
I think a real key difference here is the amount of evidence that the central banks wanted before they were comfortable with a cut. The ECB and the Bank of Canada, they had this tone that it was almost like a cautious cut where they were willing to do it, but they're like, we're not quite sure if we're going to do another one. Whereas the Fed, I think they want to be a lot more confident so that when they start cutting, that they can continue to do that.
And let's talk about really the economic impact that has. First of all, what is happening here in the United States is certainly different than what's happening in Europe and Canada, right? The facts and circumstances are different. For example, we have immigration, we have people coming into this country, we have real estate inflation, and that is putting pressure on the Federal Reserve, and that's what they're looking at. They are absolutely seeing what the ECB, the European Central Bank in Canada, is doing, but they're looking at the facts in front of them today. And by the way, we have the world's biggest political prize coming up here at the end of the year. The Fed, unfortunately, will be part of that conversation. So between now and the election, what will they do? Right now, the economic impact could be that they could stand on the sideline, but not likely.
That's right. Yeah, I think that enough evidence will accumulate by their September meeting where they will be comfortable, they will be confident enough to actually start cutting rates at that point. And I think that would actually be, they'd have a sigh of relief because they'd be like, oh, it's far enough away from the election that it won't give the appearance as though they're trying to meddle with the outcome or anything like that. I don't think that they're going to have to wait all the way until December. We've had some early indicators of some weakening of consumer spending. There's still some decent wage growth, but consumers are beginning to pinch pennies and cut back a little bit. We know manufacturing has really been going through a protracted recession. There were 16 months in a row of a decline in activity and then a brief glimmer of hope back in March, and then things went down again. So there are certainly signs that areas of the economy are struggling, even though on average, the economy seems to be doing just fine.
So let's talk about that just a little bit. There is a recession in the segment of manufacturing, but not across the total economy. In fact, just on Friday, and we saw 272,000 jobs created, and that is not exactly what the economists wanted.
No, that was an eye-popping number, the 272. I had to double-check that just to make sure it wasn't a typo, because the consensus was calling for something like 180,000. My personal expectation was that it was going to come in closer to about 170,000. And so this big move higher was really a surprise. A lot of it is still concentrated in government, education, and healthcare. Those are areas that tend to be rather insulated from the ups and downs and vagaries of the overall economy. Some of those more what we would call cyclical sectors of the economy are showing signs of continuing declines in payrolls growth. So it's still growing. It's doing it at a slightly more moderate pace. And I think that's fine, because we had rip-roaring growth back in 2023 for the labor market. Now it's going towards a more sustainable path of growth. So it's not like this big sudden stop of growth.
So let's change topics and talk about roaring kitty or grumpy cat. And if it's not, everyone's going to know what that means.
That's right. Yeah. So Roaring Kitty is the Reddit handle for Keith Gill. He was the one made famous coming out of COVID with some of his big bets on GameStop, on that stock. He really kind of did kick off that whole meme mania.
And by the way, you saw on Friday that they stopped trading early in the day because of unusual activity.
Yeah, there was lots of unusual things going on. So because of the big run-up in the stock price, GameStop came out and they announced that they were going to be issuing more shares to try to raise money. They're like, hey, you know what? If the market is going to value the company at a certain amount, let's make hay while the sun is shining. And then Keith Gill, he was also going to go on YouTube in order to basically return to that platform. Maybe he was getting a little bored, wanted to come out of retirement. And my big concern here is that you do see a lot of media attention on some of these meme stocks, on some of these personalities. But broadly, the market itself, there's a lot of really good opportunities still. It's not as though this meme mania is spilling over to the rest of the broader market.
And however, it is an issue because, if you talk about gambling, and this is a form of gambling, you look at what that stock is doing, it's up a whopping 272% for the quarter.
Yes.
And you can see why these guys are in their basements trading the stock, right? But as you said, is not translating to the rest of the market because you have to look at the fundamentals of this company, and they don't line up, even though the stock price is being traded that way. At the end of the day, what are the economics of each individual company? That is really what's driving the market, and that's really what folks should do, is understand what is in that portfolio, why it is there, what's making sense, is it helping you get to your financial plan?